Hey there! Happy April! Things have slowed down. Sort of. Buyers in the Fraser Valley have more choice heading into the spring market. Inventory levels for March were at the highest they've been in the past 5 years, probably because March sales were slower than anticipated, with only 1,395 transactions recorded on the Fraser Valley's MLS. That's a 13% increase over February, but it's still 31% below the 10-year average. Sales were also the second lowest recorded for a March in a decade. Active listings were 6,197, up 11% over last month and up 37% over March of 2023. New listings increased 7% in March to 2,986, but remained 12% below the 10-year average. With a sales to active listing ratio of 23%, overall market conditions remain in seller's market territory. But as always, some cities are doing better than others. The average number of days on the market continues to decline, with single-family detached homes spending 27 days on the market. That's down from 35 days in February. Apartments spending 26 days on the market. That's down from 29 days in February. And townhomes were the quickest, selling in only 20 days on average, down from 28 days on average in February. Overall benchmark prices also edged up again in March by 1.4% over February and up 4.6% over March of last year. Single-family detached saw the largest growth. It rose to $1,517,100. That's a 2.1% increase compared to February, and that's up 8.8% compared to March of last year. Townhomes rose to $846,900, up 1.9% compared to February, and up 7.2% over March of last year. Lastly, apartments rose to $555,000. That's up 1.6% compared to February, and up 6.9% over March of last year. So what does this all mean? Sales are down, inventory is increasing, but prices are going up and days on market are dropping? Shouldn't we be seeing the opposite of this? When you take into account the low inventory, it all starts to make a little more sense, especially when you account for the 17% population growth we've seen in the last 10 years. We're not 10% below the historic average, we're closer to 30%, and that's a pretty huge disparity. This means that buyers continue to fight for the best listings. We saw another wave of multiple offers last month, pushing prices up on the well-priced A properties. They move quickly, bringing average days on market down. In fact, I've been in multiple offers on multiple properties over the last few weeks, one of which received 8 offers and sold for 9.2% over list price. It was already well priced. This means as a seller, you've got to be sharp on your value proposition if you want to be one of the homes that actually sells, rather than one that sells the neighbors. Either looking great for the price or pricing great for the way the home looks. But if you get this balance right, you'll have buyers ready and waiting. If you're a buyer, rest assured, you're not the only one eyeing up that sexy new listing. So be ready to move quick and potentially compete. It also means, though, that there's some good buys on the less sought after inventory. So if you're willing to patiently negotiate and maybe put a little sweat equity in, you could save a bit of money. If you'd like a more in-depth breakdown by city, check out the stats page at jkre.ca or download my complete stats package. And if you've got any questions regarding all things real estate, whether that's buying, selling, or investing, give me a call.